And we've got HSBC shares in Hong Kong down 2%. Standard Chartered Bank, those stock is down more than 5%, as investors obviously digest those proposals by President Obama and decide what the next move will be. So for more on this, I'm joined by Chris Roebuck, who's the visiting professor at the Cass Business School here in London. Good to see you, Chris. Tough rules, tough talking. Yes. Did we expect Obama to do this?
It's probably fair to say we expected him to do it at some point in time, but probably not quite as quickly as he did. And I think there may be a linkage there to what happened in Massachusetts, in that he needs to show that he's still in control and the agenda is his to decide.
This phrase, too big to fail, is size the problem, though?
Really, the issue is not about size, it's about what the banks do. The size issue is just the number of people you have. If you have a bank that is dealing, as well as taking money from people on the high street, that's the issue Obama is worried about. The fact that the bank can deal using that money, and if something goes wrong, the people on the high street suffer. And what he's trying to do is he's trying to break that link, so if people make a bad call on the dealing side, the bank goes down, and the government doesn't have to bail it out to protect the public.
Is that difficult to regulate, though?
I think there could be some interesting problems in terms of how you make that cut between the dealing side and the side that pulls in money from the general public. Certainly the bigger of the banks, for example Citigroup, have a significant public side, but the dealing side is smaller, so therefore it may be more easy to make that cut. Goldman's, it's the reverse. But generally speaking, where you get the join between the two, there's crossover, so it might be difficult on a really practical day-to-day basis.
And you talked about Citigroup, of course. They're talking about some of these big banks having to be broken up. Do you think that's a possibility?
The issue is, it's not about going back to the 1930s where the world was much smaller in terms of movements of money, financial trading, etc., etc. We can't possibly do that. We're in a situation where if you have a large global bank, you have to work out how to do it. And if it's servicing customers across the world, and you can only control it in terms of what it does in America, you can only break up the American part. That
is the object of this exercise, isn't it? Is it global regulation, and do you think the UK will follow Obama's lead?
The question is the degree to which people will feel, A, it's a good idea to follow Obama, and B, they need to follow Obama because the Americans are telling them that's the way the world should be. If you look at the G20, most of them will probably go along with what Obama is currently doing in some way, shape or form. The interesting group is the group of countries, 7, 8, 9 countries that have significant financial services that aren't in the G20, like Switzerland, Singapore, etc. The question for Obama is, will those follow suit? And if we look at what's happened when those countries have, to a degree, done things that America doesn't like, in the end the Americans can influence them, to put it politely, to go their way.
Chris Roebuck from the Cass